So we had our third straight day of the market just not doing much of anything today. We're all watching for the after hours, and as I've been recording this, Nvidia has announced, and we're down a few points in the S&P, but nothing major, right? And it ended up being, I think, it will ultimately end up being a good thing by the time it's all said and done. I explain why in today's video. I break it down, what the market forecast indicator is telling us, and then I go into, some of the other indicators and kind of show, okay, like what kind of trend, what kind of patterns are we seeing that would suggest, what the market will end up doing coming out of this, and how much longer. Like, we've had a really good, a decent run since last Friday's little bounce. We've held the bounce, we've added to it just a little bit, but we've added to it. And so, the expectation going forward, okay, how much more as we head into a really important couple of weeks? Employment report next week, inflation report the week after that, and then the FOMC with that expected rate cut, which is the most important thing by far. And I explain why we need to be paying more attention to the bond market than Nvidia's earnings results in today's video. So we'll break that down. Take a look at our sector rotation. A pretty interesting sector rotation today. One rotation that's happening that's actually showing a little bit of a red flag. So I break that down in today's video as well. And then our trade ideas in a sector that's been doing really well. It's been getting a lot of kudos on TV lately. But the question is, in terms of like how much, how bullish can it be going forward? So we'll talk about that and trade one of the standout names in that sector. So let's go ahead and get started. Today is Wednesday, August the 27th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. So you can see the intermediate line continued higher, continued into the upper reversal zone, now clearly has crossed the market sentiment line, so clearly up above it by a few percentage points. The momentum line bouncing out as we expected, right? We talked about that yesterday, that especially with the intermediate confirmation signals on the other indexes, we'll see here in a second. We expected it would bounce out of these, out of this bearish territory levels. You can see the near-term line still kind of trying to figure out what it wants to do, but the near-term line did jump up above the 80th percentile. Finally, got it to the 88th percentile today. You can't see it there because it's behind the green line, but you can see it right there. So that's a good move higher. So the near-term line getting into the upper reversal zone, as we thought it would originally when you had the strong little bounce on Friday last week. A good opportunity, with Nvidia after hours here, the earnings in the after hours, or the market's down a little, the stock's down a little bit, relatively speaking, right, compared to 89%. We'll talk about that more in the full version of the video here later. But yeah, you can see that, this is a nice little bounce. It's a continuation of what we saw Friday, and we're, a little bit of a drop on Monday, and we thought it was no big deal then, and we've been continuing higher now. So that's a good sign for the markets. The NASDAQ 100, it's same thing. Again, we're up, 3 days, 2 out of the last 3 days, the last 2 days in a row. The near-term line's also almost up to the 90th percentile. The intermediate line does not cross market sentiment, not like it has on the S&P 500, but you can see it's moving higher. The momentum line also bouncing out of bearish territory there. If you take a look at the Dow Jones Industrial Average, a little different story. The intermediate line is still in the reversal zone. It never did drop below it. It did earlier when you got this bull tag here on August 1st, right there, and then it's been heading higher ever since. Bull tags are really good buying signals until they turn lower, right? And like they're either the beginning of intermediate declines or they are really good buying signals and continue new legs on intermediate runs to the upside. So really good opportunity. We find that pretty quickly. As you can see, it bounces really quickly. If it is going to bounce, it bounces pretty quickly there. And if it doesn't, then it doesn't. So we've had a nice little run. The near-term line still, again, it dropped below 60 yesterday, but bouncing back up as we thought. Again, the intermediate confirmation signal on the Dow, you can see oversold momentum line, strongly overbought intermediate line. So, we had some bullish buy the dip signal, and we bounced up today. Not a lot, but 1/3% is a pretty good number there. And if I take a look at the Russell 2000, it bounced up the most. So again, 2/3%. This intermediate line is now above the 90th percentile. So pretty strong move. The near-term line's also up there as well. crossing above the 90th percentile. The momentum line coming out of oversold levels, but still in bearish territory. So it still has room to run. That's the nice thing. It's like, there was this bullish signal here, and we bounce, and it bounced on the Dow Jones too. But both lines still have room to go up. Like the momentum line, on the Dow, it's still in the lower half of the chart. On the Russell 2000, it's still in the bearish territory. The S&P 500 is barely crossing the midpoint of the chart. So with a strong near-term posture, with the near-term line up as strong as it is, there's opportunity for that momentum line to make a new leg itself back up to the upside. Again, you can see it fluctuates pretty quickly between bullish and bearish territory. So, if it does bounce up another day or two, it's not going to stay up there for a week or two. It's the near-term line that starts to get the longer runs, as long as we kind of avoid the bearish declines in the momentum line. And we do get them. As long as they're not too oversold, then we're fine. And that's been the case. We've been able to avoid a strongly oversold, like to the extreme on the momentum line. That's usually when you start to worry about, and like in this case over here, an intermediate decline, and another one right there that turned into a correction. And so we're doing okay. We're doing really okay, and continuing, again, a very mature intermediate run that's, continuing higher here on the zigzag chart up to 25.65%. So again, no 5% decline anytime soon on this. And I can just move this here. Let me activate that and move this up to now the new highest close. And there we go. So again, a 5% drop now is getting to the point where it won't drop, because it's about 5% to get down to that 23% retracement currently. That's not always the case, but currently. And it's getting to the point where we can drop 5% and still stay above the pre-correction high. So that's a really, really good move. I mean, we're going to get a 5% decline at some point in time. We've never gone without one. But when we do, we'll at least know that it's not going to be trend changing, right? It's just going to be kind of a breather, and most likely an opportunity for, again, a new double-digit green tag to come after it, like we've seen so many times before. All right, well, that does it for our preview video today. If you want to unlock the rest of the full version of this video, you can use that link down in the description below or in the pinned comment, and you get access to the full version, including our trade idea that we put at the end of these Market Outlook videos. That's available for all our subscribers to marketscholars.com, including our foundation tier, starting at just $29 a month, roughly $1.40 per video. So really good value, considering you get access to the full 30-minute videos day in and day out, the trade ideas that are posted in each video, the Market Outlook Live, where we manage those trades every day, 3:30 Eastern Time on a live stream. We manage all the trades we do. We talk about whether we should stay in them or get out of them. And then you also get access to our Market Outlook Live Trade Tracker, where we track the results of these trades. Again, available for all of our subscribers within the description, the links down below, the description or the pinned comment. Thank you for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment on the video, share it with anybody else. Follow me on Twitter for more content at DavidSettle42 from day to day. Follow me as well on Facebook, LinkedIn, other social media channels. Have a great rest of your Wednesday night, everybody, and we'll see you all tomorrow.